Gold prices are pushing higher after a sharp decline that we've seen in the wake of the US election. Certainly from a long-term perspective, everyone has been long gold. And so the question mark is this the beginning of the next leg higher for gold, or are we going to see further downside? Let's look into some of the key graphs that underpin this trend and try to ascertain where we go from here. So here we go. This is the first chart I wanted to show you guys. And first and foremost, what we can see here is that there is a relationship between US debt, so government debt to GDP we've got here, which is the orange line, and the price of gold. Essentially, when they ramp up spending and they increase debt in the US, we see strengthening for gold. That could be down to a number of reasons, but certainly at the moment, people are talking about if you just continue to spend more and more, if you continue to grow your debt, then the idea that the US dollar is this safe haven really is undermined, and people start to look elsewhere for assets that aren't necessarily being whittled away, because generally when you see a ramp up in terms of spending, you're either going to see one of two things, which is either a devaluation of the currency to try and deal with that, or the idea that they're going to see a big ramp up in terms of growth. I mean, ideally, you would see a strengthening in terms of the US growth picture that sort of helps with the debt to GDP ratio. But nonetheless, there is a perception that under Donald Trump, we're going to see increased spending. Whether that results in enough GDP to sort of offset that remains to be seen. But as we can see here, gold has been surging higher in anticipation of that push higher in terms of that debt to GDP ratio. It seems likely under Donald Trump, especially now that he's got both sides of Congress. And so that underpins this bullish sentiment that many have within the precious metals market. Now, in terms of monetary policy, this is another key part of it, right? And so generally when you see easing from a monetary policy standpoint, so lower interest rates or quantitative easing, things like that, it benefits the price of gold. And we can see here that at the inception of easing cycles, I have three drawn onto this one. Obviously, there's one also just to the far right of this that I haven't drawn a line on because it's just happened. And in each of these previous occurrences, we can see that it's either the inception of a bull run for gold or the middle of a bull run for gold. We generally don't see the gold market top out as we see easing get underway. The caveat to that, and we're going to get onto that, is right now people are getting caught up in the pace of easing because of the possibility of a resurgence in terms of inflation. And that's why inflation data is going to be key. Certainly looking ahead to next week, we've also got the core PCE price index, that favored Fed metric. And that's why it's important in particular to the price of gold. But as we can see here, the interest rate cut that we've just seen recently and the beginning of this easing cycle benefits gold. And the more we ease within this cycle and the faster we eased, in my mind, I think it benefits gold. Elsewhere, this is the gold to silver ratio compared to the dollar index. What it points towards is that actually we've seen some rotation between gold and silver of late. And with the surge that we've seen in terms of the US dollar, it's a bit of a risk-off move. That should point towards a resurgence in terms of gold relative to silver. Now, that could come with both of them declining. It's just that gold declines less than silver. So that's the caveat to that. This doesn't necessarily mean that we're going to see a surge in gold and silver. We could see both of them decline, but the gold and silver ratio rise. But typically, according to the trend that we've been seeing over the course of much of this year, the strength we're seeing in terms of the US dollar should benefit the likes of gold, primarily through heightened weakness in terms of silver, quite frankly. Then this is an interesting one, right? So what we've seen recently is a resurgence in terms of US inflation expectations. I'll show you exactly why in terms of the breakdown for core inflation, but also we've been seeing sort of strength in terms of some of the jobs numbers, the Trump move as well. So a number of different things that have been elevating inflation expectations. What we've got here is the two-year inflation swaps in the US. I have inverted it, right? So the weakness we're seeing in this blue line recently, in actual fact, is the opposite. It's a resurgence in inflation expectations. And that rise in terms of inflation expectations has impacted expectations of monetary policy, right? Remember, we were talking about 50 basis points in November, 50 basis points in December. Well, what's happened? 25 basis points in November, and now people are questioning whether we see a rate cut in December, whereas not that long ago we were talking about 50, right? So that has shown the shift that is a result of this shift in terms of inflation expectations, which has moved towards the upside. Now, looking at that blue line, what we can see is we've come into, or we are around an area that typically this market sort of starts to roll over from and starts to reverse. And I've drawn these vertical lines, and you can see that the vertical lines tally up with what on this chart is a bottom, but essentially it's a peak. So the highs for inflation expectations. And on each of these occurrences that you can see here, they have marked a bottom or of price action for gold and the beginning of the next leg higher for gold. And that essentially means that the inflation expectations at the moment are moving upwards, right? People are growing fearful of inflation once again, down to a number of factors, as I highlighted, most notably Donald Trump coming into power at the moment and what his policies might do. And so what's key going forward is, will we see a continued increase of those fears, or will we see them abate? And part of that will come down to the data. And like I said, we're getting the core PCE price index next week. And certainly if that comes in towards a downside or below expectations, we could start to see another bottom forming for this. Essentially, it's a top for inflation expectations. And if that happens, then we start to see gold moving towards the upside in a meaningful manner. The caveat is there's no guarantee that that will happen. And certainly if we see continued strength in terms of the month-on-month inflation metric for the core PCE figure, then we could see a continuation of the rebound in inflation expectations, and that could weigh on the price of gold. Here's the breakdown for core inflation across two different metrics: the core CPI, which is the blue line or the blue columns, and then the core PCE, which is the orange line and the orange columns. What we can see on the top end is CPI is more troublesome than PCE. So you can just say, well, look, the Fed like the PCE, so that's fine. However, what you can see in the second section is generally when we see the CPI coming in first, the general trajectory of the CPI does give us an idea of where we're going to go in terms of the PCE metric. You can see that the low figures in May, June, July, across in particular the CPI, but also to an extent the PCE figures, that's kind of being left behind, right? So September, we saw 0.312 and 0.254. Both of them are above where we need to be, essentially. And then when we look at the latest CPI figure, it was another elevated number. So at least it was lower than the prior month, but there's certainly a strong chance that we're going to see another figure that is above where we need to be. And then when we look at the core PCE and the core CPI figures on a 5-month annualized basis. So once we see all of these big figures stripped out at sort of the back end of Q1 heading into Q2 of next year, where are we? Well, not so long ago, everything sort of looked pretty hunky-dory at that point in time. And on the PCE metric, it still looks all right, right? So 2.14. But as you can see here, that CPI figure appears to be leading things because we're seeing it ahead of time. And that CPI 5-month annualized metric has been moving towards the upside. So there's a good chance we see the same kind of thing for the core PCE number. And that's where we see this increased inflation expectations coming in. And if we do see another strong month-on-month inflation metric, then as we saw here, that won't necessarily mark the reversal point for inflation expectations, and maybe might not necessarily mark the bottom for gold either. That highlights the importance of that inflation reading coming out next week. This week, we also have inflation out of a number of countries, so like Canada, the UK, Japan. Whether that's going to feed into US expectations remains to be seen. But certainly it's really that core PCE figure is going to be more important. So essentially, we are around the kind of area that historically we have topped out in terms of inflation expectations. But there's still that caveat that, you know, we could go further if next week's data signals as much. Now, bearing in mind, this week we have on Friday the PMI numbers, right? And PMI numbers give us an idea of underlying inflation pressures within the services sector, within the manufacturing sector. And so that gives us another area for us to be watching out for and to guide inflation expectations. Weak economic data, weak price data, that's the kind of thing that should provide the basis for strength for gold and a bottom for gold. Let's look at gold itself. This is the chart for gold, as we can see here. And what is notable is that we are posting the best day in over a week here. Certainly, if I'm let me just get rid of that. If I'm going to look in terms of price action going forward, I need to look at the wider spectrum. So this is the weekly time frame. What we can see on this weekly time frame is that we've got this long-term inside trend line. So what was resistance? We just zoom in so you can see a number of these. So 1, 2, 3, 4 touches now coming into support. So we've got that inside trend line, resistance turned into support, tagged it, and now starting to move higher. That support was absolutely slap bang with the 50% Fibonacci retracement level. If we look here, most notably, if we're looking at talk about recent price action, you can see this is where the US election has happened. So we've been selling off in a meaningful manner. And as I said, it's all to do with inflation expectations. As soon as Trump got that widespread win across both sides of Congress, so inflation expectations were lifted, and we've seen that driving down the price of gold. The rebound we're seeing at the moment could be a bottom, and certainly from a wider sort of long-term trend, I am bullish for this market. Does it mean it is the actual bottom? Maybe, but arguably for us to bottom out in gold, we might need to bottom out or top out in terms of inflation expectations. And that's going to come down to things like the PMI number, which is on Friday, the likes of the core PCE metric, which is coming in next week. So those things are going to be really key. Another thing to be looking out for here is, let's just get rid of the Fibonacci level. Well, actually, we can keep it on. You can still see it. This is the Bollinger Band, essentially the 20-week SMA. You can see that's where we've tagged. So we've got this confluence of trend line support of the 50% Fibonacci retracement and this 20-week SMA, which tagged it here. We came into that level once again here. We've tagged it here. We found support here. We found resistance all around here. We've found support here. So generally, when you utilize these indicators, it's about whether it's worked in the past. And you can see very clearly this has formed very clear support and resistance over the course of the past near enough 2 years, essentially. So will we see the bottom once again here, or are we going to drift below it like we did throughout this period and start to find resistance as we saw in the second half of 2023? Inflation expectations, that's going to be absolutely key as we move forward. And so whilst I am bullish and I have got this confluence of support, I would say be careful around economic data or be aware of the economic data, because certainly if the economic data sort of points towards topping out in terms of those inflation expectations, then that's the kind of thing that could really lift the price of gold. This is the 4-hour chart, and what we can see here is that we're moving towards the upside, but we haven't broken out of this intraday trend. 2618 is the resistance level to be looking out for around there. Until then, there's a good chance that this rebound is another retracement. So we put on the Fibonacci level and we're slap bang on the 76.4, sorry. And so is that the peak? Well, we don't know. By the time we upload this video, it might be beyond that level. There's a good chance because we're exactly on that level. But certainly I'll be looking out for this 2618 level to negate the near-term downtrend that's been playing out on an intraday basis. But certainly, yes, we're posting the best day that we have done for some time, but that's set within the worst month as things stand since 2021, which is back here around the middle of 2021. And so there's no guarantees that it's going to be over. The data is going to be absolutely key. I am bullish for a longer term perspective, but certainly inflation expectations will be key. And that can be guided from a number of different things, a number of different inflation metrics, like the PMI in particular on Friday, like that core PCE metric next week. It's all going to be absolutely key as we look for the potential bottom here for gold.